Hello. I think we saw this week, Martin, the biggest jump of the Chinese tech sector.
That's 100% true.
Can you explain us what happened and why?
Yeah. I will do. I will do my best. As you're watching us, could you, if you have time, click on the little thumb up that you like what you're going to see. First of all, what we saw the week before this week is that the Chinese tech companies had a really negative week. And why was that? That was actually because the U.S. government said, and in specific the Security and Exchange Commission, they said they were going to ban listings of Chinese companies. So it's important for you to understand, I think, because we had a lot of questions about this, and I think a lot of people are not 100% aware of the fact when they own, for instance, Alibaba shares, what they actually own. You're not owning the shares. You're owning what they call ADR, an American Depository Receipt. Now that is basically a certificate established or made or built, or how you would call it, by a US bank, giving you the right, some sort of right, that you own stocks abroad, but you're not actually holding the stocks. And there's a big issue with China, of course, that they have a sort of ban in the law which blocks them or does not allow companies to present all the figures that the US government desires to be able to do proper supervision of the financial markets. So due to these rumors, you saw initially that the stocks went down almost 30-40%. We hit the lowest levels in 6 years.
If you look at that index, what was it, the level at the 1st of January?
The price of the
price.
Yeah, the index has a name. It's called the Dragon Index. I don't have the price I didn't write it down.
Okay, well, how much did it drop until yesterday or Wednesday when it gained? Do you know that?
From the 1st of January?
Yeah, around this year.
I think it was approximately 25%.
Lower.
Yeah.
Okay.
Yeah. And we bounced on Wednesday 9% again from the lowest level, but that was the lowest level in the last 6 years.
Yeah.
So if you think about companies just as JD.com, Alibaba, Yum China, you know what Yum China is? It's the operator of KFC, Kentucky Fried Chicken. They went up all with about 30% on Wednesday. So we saw a massive rise in those stocks. And why then all of a sudden this rise after first they dropped so heavily? That was because the Chinese government said they were making significant steps to tease or to make the US government happy again. If you look what is happening in the market at the moment, or how you should act, I think there's one thing always when you doubt about something, you better act. That's something that I always...
Okay, you repeat that one?
When you doubt about something and you can do something about it, then I would always opt to do something about it and not live in doubt. No, I think that's my personal thing, and that's also what I would recommend that investors now having stocks from Chinese companies in the US is to take action. And why is that? Because you see that the larger institutional players in the US approximately have 200 billion of holdings with asset managers or ETF funds, etc. And they are all selling, not all of a sudden, of course, but they're selling the US listings and changing that to Hong Kong listings. Mm-hmm. And I think that is something worthwhile considering.
Now,
for
do you see any correlation with the war that's going on?
Yeah, of course, everything is related, no? And I think what is important also is the popularity of Chinese stocks, because China today was on the headlines on the television that China remains his neutral position. Mm-hmm. Now you know also what that means. That can have some impact, I think, on whether you opt for Amazon or you opt for JD.com. From an investment perspective.
And I think if you look at from a macroeconomic perspective, I think with the last months we talked multiple times about the Chinese market and that the economy is suffering mainly due to the real estate sector. That 30% of all the company loans are in China, 40% of them are related to real estate, and that market collapsed. Yeah. And so they have really big problems. So I think you also, that's not directly related, of course, to the war, but it's related to the action that they are undertaking.
That the government is taking, you mean? Yeah, I think so. I mean,
they can't handle that much more problems.
Now, one of the things that you always, I work with you now 12 years, no? And when I started working with you, I was quite young, still quite young, but at that moment you have always these things that stick in your head when somebody that is more senior explains to you. I said, what comes out of China, you can never really evaluate whether it's true or not. The figures that are presented by China, and of course now it's the truth is here.
Yeah.
The US is actually saying that, and those are not, it's like not rules. No, it's like, oh yeah, because, but it's one of the things that always wary when you see Chinese figures, because what is the truth? If you look at these companies, Alibaba at the moment has earnings per share of 7.85 and a price of 100. So it's about 10 times the profit. If it's true, but are those figures true? How are they presenting those earnings per shares? Is that what are they taking out? What are they not taking in consideration, etc., etc., etc.? And of course, the Chinese government now saying, yeah, we will keep supporting the stock market, and we will reinforce the real estate sector. But yeah.
Yeah, I gave a presentation tomorrow at the local university, and then I said about investing. It were young people, and I said investing is quite culture based. And I had a guy from the US also in the room, and I said, yeah, in your country it's much more open. If you look at Yahoo Finance, what you can find, and if you look at European brokers, they don't give that much information.
Less.
So if you look at for a scale, US also, if they have official hearings, it's always open. There are cameras, and the public can see everything. Then Europe is already a little bit less. And then if you look at the other side of the spectrum, are companies like China. You have to, don't go blind on those figures.
No, absolutely not. So yeah, from what to do as an investor, I think it is worthwhile to consider, if you want to keep exposure and your broker facilitates direct access to Hong Kong, pay the little transaction fee and change into Hong Kong, because if it gets delisted, I mean, it's a really big nightmare to get the change done, etc. So and those big parties are not doing it for anything.
Yeah.
Be aware, I mean, you are then obviously investing in Hong Kong dollars. Hong Kong dollars is quite funny. If you look at the price, you see that at 7.75, the government stabilizes it, then they let it go sometimes, and then
it's quite stable.
It's very stable.
Yeah.
But also, if you have a little calculation, if you hold 10,000 US dollars in Alibaba, which is 100 shares, you need to buy approximately 8 times as much. So you need to buy 800 shares in Hong Kong, obviously to compensate that, because the price is in Hong Kong dollars also 98.
It's like always, do your homework.
Do your homework. Just make sure that you do the right thing. And I think that's it. So what I also want to share with you, if you hold ADRs also from other companies, be aware that you're not holding the physical stocks and that you are paying actually a fee, which is not a lot, but it is something that, if you take the direct listing, also Shell has a listing, you pay 2 cents approximately per annum. Which
you see also how important people can be, or what kind of influence, because I think it was not the minister who said it, but there was a law minister.
Yeah, a law minister, yeah.
He said something, you explained what he said, but he said something, and that index made the biggest jump ever. And that's also difficult for us as investors. So you can do your homework, and suddenly something happens in the market. One person can say something, and it goes. In this case, of course, if you were short, it was not good. But most people are long, so then it has such
but it's
a
also
big
it comes always at a point. And I don't know if you agree with me. I think that people were getting really sick and tired of these stocks, right?
Yeah.
I mean, when you speak
but also with China last year, that they suddenly, the government had it every month, they installed new rules. For example, they did a ban on the homework companies that were facilitating. How do you say it?
The education companies. And then the other ban for children, a limited amount of time that your child can stay without
online.
the internet.
That had such a big impact.
Absolutely.
Yeah, but it was. I think if you hold those shares, you had a good week. No.
You had definitely a good week if you bought them on Monday. If you bought them a month ago, then you're seeing some light at the end of a very dark tunnel.
Yeah.
Okay.
Thank you. So we discussed one topic. We didn't talk about the war and influences on the market, but I think it's good. This is I think what we see. A lot of people are investing in those companies. There's a lot of information and misinformation about it. So I think you explained very well how you can look at it and how you can act on it. So thank you, Martin.
Thank you for asking
those
good questions.
Give us a thumb. See you next week.
See you next week.
Stay safe. Thank you for watching.